Forex Football and You, a guide to becoming a winning player in the market. Hi, this is Daniel, and thank you for logging on to this video. I was actually comparing football one day to the Forex market and how similar they can be. Forex has a strategy, or trading any market has a strategy to it. You have to develop a strategy and a plan to approach the markets to be successful. You have to do the same thing if you're a football player or a football coach or in any capacity in football. And a lot of people love American football. It has a lot of fans, a great following. So I thought, well, let me break this down and see how similar it is. And I become very intrigued about how similar playing football is to trading the market. So I thought, well, let me do a video course and approach it from a standpoint of comparing these two, and maybe this will help you in your approach, because I trade the market and I also train people to trade the market, and the largest hurdle is being able to approach it and make sense of it. So hopefully this will help you and give you another perspective of how you may could approach the market. This is video 1 in a series of 3. So let's go ahead and get started. The first thing I want to do for you new traders is actually talk about what is trading. And trading is actually just the act of exchanging one product or service for another. And at the time of this recording, oil is trading at about 107 or 108 a barrel, $108 a barrel. And we're all suffering at the pump with gasoline prices. So you can kind of understand that what's going on right now is a lot of folks are making a lot of money trading in the oil market. I actually got my start trading oil futures over 10 years ago. And so trading is actually just exchanging one product or service for another. So basically in the market of the crude oil market, they're exchanging dollars. The oil market is a dollar-based market. So dollars are exchanged for crude oil. And this can be done in the spot market, futures market. People can actually take possession of the oil, the crude oil, and store it. But this is actually what is taking place in the market. As the price goes up, people are willing to buy. As prices go up, if there are people willing to buy, there's enough demand, the price is going to continue to go up because the sellers are going to continue to raise the price. As the demand goes down, the sellers are going to lower the price so that they can continue to still sell their product. So what types of products or services are traded online every day? Well, we have equity stocks like Ford, Microsoft. Every day you hear on CNBC about different stocks going up or down, what are good stocks to buy. You also see options being traded, and that's controlling a stock but not actually owning it. It has an expiration date, and you have to actually liquidate your position there before the expired time of that option. You have futures, commodities like oil, as I said before, gold, indexes, even currencies have futures, and you can trade those on the futures market. And then you have Forex, and you trade things like the dollar against the euro or the euro against the British pound. The Forex is traded in pairs, so this is another market. Let's look at the positives and the negatives of trading and becoming a trader. First of all, one of the positives is you have no selling of products. If you are on eBay or you have your own website and you're shipping products around the world, you have the paperwork to worry about. You have to worry about getting those products shipped out. You have costs associated with buying the products. You don't have that in trading, okay? So that was a big advantage for me. You have no employees. You don't have to worry about attitudes or people and the way they act to you. You don't have to worry about, trying to get everybody to work together. You don't have the salaries that stress you out. So you have no employees in trading. It's just you and the market. You have low overhead. If you have a computer and you have an internet connection, you can engage in trading. This was a big one for me. You have time freedom. You can spend your time doing other things and work your trading around your schedule. That was very important for me, and it might be for you as well. You have financial gain opportunities. You can make a lot of money in the market once you learn how the market really works and you develop a strategy to approach it to where you have a successful game plan. Remember, there is risk in trading, okay? Do not trade any money that you can't afford to lose. But when you get good at trading, there is some very good upside potential to trading. And then the market is open 24 hours a day when it comes to trading the Forex market. Other markets trade every day, 5 days a week, but the Forex market is open 24 hours a day. So no matter where you live, you can work your schedule around that. Now, the disadvantages to trading, you have to have a strong psychological edge. And this is something that you may not realize as a new trader. You may think you can just approach this and, oh yeah, this looks really good. You've got a system and you trade this and that and everything looks really good. And as long as the market is in a certain character and this particular system you have is working, everything's fine. But what happens when you start losing some trades? You have to develop a strong psychological edge to be able to overcome the down times in your trading. There's a big learning curve in trading. Quite contrary to what a lot of people think, you have to learn a lot about the market and how it works to really become good and efficient at trading. It's not as easy as a lot of people make it sound on these websites, I'll tell you that, because you are not only learning about the market, you're learning about yourself. You have uncertainty of outcome. When you engage in a trade, you do not know what's going to happen next. You can think you do, but none of us can know the future. We don't know tomorrow if it's going to rain. We don't know tomorrow if the sun is going to shine. We can kind of have a good probability of one happening over the other, but there is uncertainty still there, and that's the same thing in the markets. You have to examine yourself, and a lot of people do not want to go down that road. You have to look at yourself and find out, where are my weaknesses? You have to improve upon those weaknesses, because a lot of those will affect your trading. It goes back to the strong psychological edge that you must develop. Also, trading is stressful. There's a lot of traders that you may watch on television or on the internet, and you see them talk, and you see them place trades, and they look very calm. It is a proven fact that when we trade, our stress level goes up. Whether you notice it or not, it happens because money is tied to the outcome of that trade. So it produces stress for you. You have to learn how to overcome and how to work with that, how to handle that. There's risk of great financial loss. There's always risk of that. You will get into a point a lot of times where you are in the euphoric stage of trading. You feel like you can't lose. And, man, I'm good at this. This is not that hard. And then you will start trading, not protecting yourself, not using stops and things like that. Then you pretty much expose yourself to a risk of great financial loss, of things that really happen. Just recently we had the dollar-yen after the earthquake fall 600 and something pips in one day, and most people wouldn't even realize that that could happen, but it did. And for those who weren't prepared for that, they got wiped out. So you always want to be aware that there's risk of great financial loss. Now, I personally feel that the positives far outweigh the negatives, and if you do too, then you will continue chasing after your dream to be a trader. Now, how do you achieve trading success? Let's look at a few of those points that I think that you need to implement to be able to do that. First of all, you've got to have a good foundation of education. You need to understand how the markets truly work, not just some little system that shows you when to get in when two lines cross, but I mean a good foundational education about how the markets truly work, how institutions trade, how professional traders conduct their business on a daily basis. I think that's very important. The next thing is you need to either get with someone who has a solid model or method and implement that and form that around your own personality, or create one for yourself based on the education you receive. You must have a solid model or method to be able to extract money out of the market on a regular basis. Then you must have firm beliefs about the market and you. This is the developmental process of your psychology and about who you are, and based on your education, you will develop beliefs about the market. And once you develop those beliefs, now you can start turning those beliefs into a firm plan, and you will be able to implement that into success. You must also create a plan for yourself over the long term, where you want to go, what you want to achieve. Those are the goals that you must set for yourself and the rules that you must abide by. Of course, it goes back to your model, but it also must be rules about how you conduct your daily plan when it comes to approaching the market. In other words, treat your trading like a business. And also, you must follow your plan day in and day out, and when you do, that is going to produce consistency for you, and your equity curve is going to go up. So that concludes part 1 of this video series, and so I hope that you will join me for part 2.